Right, good morning, everyone, and welcome to Nairametrics Corporate Deals Book webinar for the 2022 Deals Book reports that we are launching and publishing on Monday, 6th March 2023. My name is Samuel Oyekomi, and we have our guest here with us and that will help us to deal with some of the interesting numbers that were enshrined in this document. The theme for this particular event, this webinar event, is talking about the critical sectors for capital formation and capital flows in the Nigerian economy. And then we have our audience. We have Razak Ahmed, Taiwo Olajide, and Steve Osho. I'll start by reading the profile of our guest today, and I'll start with Steve Osho. Steve Osho is a co-managing partner at Commercial Partners Limited, a boutique investment banking firm, and a member of the company's executive management team, where he oversees advisory. He is a member of the Nigerian Capital Market, the Institute of Directors, Nigeria IOD, a former deputy chair of the Financial Market Dealers Association, Bond Work Group, FMDA, and a fellow of the Institute of Credit Administration. Stephen also serves on the board of M778, a boutique marketing communications advisory firm, an advisory partner at iScholar Initiative and Avail Africa, a goodwill synergy platform designed for corporations and non-governmental organizations to champion causes consistent with their social responsibility. His breadth of knowledge and operational experience in team building and business growth is enormously beneficial, allowing him to contribute to commercial partners' strategic direction and long-term sustainable success. Good morning, Steve Osho. Nice to have you here.
Morning, Samuel. My pleasure.
Thank you for joining us. Yeah, we also have Taiwo Olatunji. He is an investment banking professional with over 16 years of experience in business and financial advisory services. He has been instrumental to several successful financial transactions, including the first and second triple tranche Eurobond offerings of $2.87 billion US and $4 billion US by the federal government of Nigeria, the bond issuance of 187.6 billion naira by Dangote Industries Limited, and the 127 billion naira first and second commercial issuance by MTN Nigeria Group PLC. He also advised Access Holdings PLC on the acquisition of a majority equity stake in First Guarantee Pension Limited, the acquisition of an indirect equity stake in Sigma Pensions Limited, and the subsequent formation of Access Pensions Limited through the merger of both entities. Taiwo Olatunji began his investment banking career with FSDH Merchant Bank Limited in 2015 as head of capital markets, and moved to FSDH Capital Limited as head of investment banking in 2019. Prior to his time at FSDH, Taiwo was a consultant and manager in the financial services unit at Accenture, Nigeria. Taiwo holds a master's in finance from the London Business School and a bachelor's English in bachelor's in engineering, from the University of Ilorin. He's also a CFA charter holder and has passed the certified PPP professional, that's CP3P preparation examination. Good morning, Taiwo Olatunji. Thanks for joining us.
Good morning, Samuel. Thanks for having me. Thank you.
Yeah, thank you very much. Finally, last but not the least, we have a whole lot of juggernauts in the house here as our guest today, which promises to be an interesting conversation. We have Razak Ahmed. Razak Ahmed is the co-founder and CEO of Cowrywise, a fintech startup digitizing retail wealth management. He is CFA charter holder and has a first-class degree in economics from Obafemi Awolowo University in Nigeria. Cowrywise is a fintech startup licensed by the SEC of Nigeria as a fund manager. They are digitizing investment management and democratizing access to savings and investment products for the growing population of the undeserved African middle class and millennials. He has led Cowrywise to grow a team of 50 full-time staff, customer base of over 700,000, and is backed by venture capital firms including Kwana Capital, Y Combinator, Venture Silk, SHL Capital, Kairos 50 Ventures, and Catalyst Fund. Razak Ahmed started out his career as investment analyst with top investment management firms including Maritime and Vetiva in Nigeria, before founding Cowryrise to democratize access to savings and investment products. Good morning, Razak Ahmed.
Yeah, good morning, Samuel. It's my pleasure to be here.
Thank you very much for joining us. Today's conversation promises to be quite interesting. Nairametrics is launching its 2022 full-year deals book report. And the deals book report is quite filled with a lot of information. Of course, it's quite important to analysts, government, regulators, business owners, as much everyone to be real, right? Even foreign investment and local investors will find the document quite insightful for them, because it gives an idea into these areas of the economy where funds are moving to, and then where the funds are coming from, and then what the businesses are using those funds for. So I will take next few minutes to talk about the Nairametrics deals book and how we come about this document, why it is important, and then we'll go into the conversation proper. So Nairametrics deals book report is a compendium of deals consummated in the Nigerian economy for the whole year 2022 here that we're talking about. And Nigerian corporates or entities that have significant interest in Nigeria raised a sum of $5.7 billion in the year 2022. Now, when you compare that with the previous year, it actually reduced. We recorded about 320 deals in 2022 compared to 177 deals that were recorded in the previous year. But of course, the reason why we have this huge surge in the amount on the volume of deals recorded was because Nairametrics kind of upgraded the methodology by which we used to capture some of these deals. Previously, before now, we do not cover deals like grants, and there are some sources that we did not leverage on. But in 2022, we tried to expand our horizon, also make sure that we have a more robust document, and that's why we're able to come up with 320 deals worth $5.7 billion and 2.41 trillion naira in 2022. But when you go through the numbers again in depth, we also saw that 75% of the companies captured in these deals report were startups. Gives you an idea of where the money is moving into, and then the investment sentiments around Nigerian startups. This is an infographics that gives you more like a snapshot of all the companies that were involved in the deals throughout the year. So breakdown, the fintech sector had the highest number of deals in 2022, accounting for 80 out of the 320 deals that were recorded in the previous year. The largest deal during this year was a $709 million investment in Bolt. Of course, according to our findings, the investors were not disclosed by Bolt. Then also Google, Techstar, and Y Combinator were the most prolific investors in the year. Google and Techstar recorded 23 and 22 deals respectively. That's they invested in an aggregate of 23 and 22 companies respectively. Y Combinator invested in about 20 companies in Nigeria during the year. Here is a chart showing the deals by type, and from here we could see that most of the deals were in form of seed and series funding. Of course, this gives you this more or less corroborates the statement of saying 75% of the deals were startups. Startups would usually raise their fundings through seed funding, series funding, venture rounds, and as you can see from this chart, we saw that seed fundings accounted for most of the volume, followed by venture round, then grants. And grants here, as you can see, like I said, previous years we literally did not cover grants and some other deal sources, but this year we're able to see, and you can see that grant actually accounted for a huge chunk of the number of deals that were consummated in the year. Now about sectors also, we see that the telecommunication sector recorded the highest in terms of amount of fundings raised, which is about $1.05 billion. that also gives you an idea about of where the fundings are going into. We also see fintech raising about $777 million. We saw logistics and transportation, interestingly, raised about $745 million during the year. The banking industry was also not left out, with $604 million raised during the year. Another chart that is quite interesting for Nigerians, even the government, foreign investors, is to see how this fund is coming to the country, because of course we talk about capital importation now every now and then. We don't have as much FDI, we don't have as much FPIs and whatnot, and of course these numbers have a significant effect on the economy, on the exchange rate at the end of the day. So we try to see how much of this money coming into these businesses come in form of dollars, and how much of those funds are in form of naira, that means raised locally. And we saw that $3.05 million, which is about over 60% of the total amount of funds recorded, were gotten in dollars. So of course, it gives you an idea. It gives you an idea that most of the fundings came into $3.05 million came in form of US dollar, while 1.07 trillion naira came in form of local currency here. 42 of the deals were undisclosed. One deal was in pounds, which was 15 million pounds, while in euro, we had 106.5 million euros. This gives us an idea that most of the funding still came locally, not foreign, to be fair now, and that might give us some insight into what is happening with our capital importation numbers, because also when you look at the numbers from the MBS and the CBN, it shows that capital importation, either in form of FDI or FPI, has gone down, especially since the COVID-19 era, and has not recovered since then. So yeah, that's an interesting one to watch also. We also try to categorize the stages of the deals. 309 of the 320 deals were completed as of the end of the year, while 11 were still ongoing, probably in form of bond issuances or commercial paper issuances, or some form of acquisition that is still ongoing and it's not completed yet. And that's why we have that. Also, in terms of utilization, of course, when you raise fundings, there are several reasons by which companies raise fundings. Either you want to expand, you want to acquire more company, or you want to pay off some debt, or you want to diversify, you want to divest into other places. You also want to boost your working capital, you want to boost your balance sheet. So yeah, here we saw that 280 out of the 320 deals were used for business expansion. And of course, most of our startups, of course, raise fundings for the sake of expansion. So that gives you an idea also here. We saw that 9 of the deals were in form of capital investment, were used for capital investment. One deal was for credit facility. One deal was to diversify. 2 of those deals were to divest. 2 of those deals were used for investment in other firms, while 25 of those deals were used for working capital. And so that's the snapshot of my presentation, and we'll be going straight into the conversation now. I'll try to unshare my screen so that we can hit the ground rolling. Yeah, the numbers are interesting. To give context into the conversation, I will want to read some stuff here. So here, Nairametrics captured 320 corporate deals in 2022, and that was worth about $5.7 billion or 2.41 trillion naira, representing an average of 1 deal per working day. Now, the number of deals increased by 80.8% from 177 deals that was recorded in the previous year, but was 35.8% lower when you compare the value compared to the previous year. Further perusal of the report also shows that startups accounted for 75% of the total volume of deals that were recorded in the year, most of which were in form of seed funding, which was around 120 deals, $1.08 billion. I will start from Steve Osho. You've seen the numbers, you've seen the document, you've seen this interesting insights from the document. So yeah, Interesting statistics, and the report noted that startups accounted for some 5% of the total volume of deals recorded in the review year. Like I said, in your own opinion, what does this say about the startup ecosystem, and how do you think this is being perceived by foreign investors, Steve?
All right, thank you, Samuel. Once again, it's my pleasure to be here. Thank you for that wonderful presentation. I think it's really deep and gives a lot of insights into what is happening in Nigerian startup space, and generally what is happening in the Nigerian corporate deals, transactions in the markets, both capital that is covered officially, and some of them that are actually happening, behind the scene, but at least we can have the statistics and the numbers to work with now. So what this tells us is just the resilience of the startup business in Nigeria. You could see that from the number you've shown, Nigerian market has attracted the most investment, alongside with some other African countries. But if you categorize them in terms of number of deals that's been done, between Kenya, Nigeria, Egypt, and South Africa, I think Nigeria still come on top of that. And that testifies to the fact that Nigerian startup ecosystem have been attracting a lot of investment. And the reason is not far-fetched, despite the fact that there's a decline in the FDI that has been coming to the markets since 2018. I think 2018, we have about $6.3 billion in terms of FDI. Between that time and 2022, that number is reduced to circa $1.6 billion to $2 billion. But despite that, we've seen a lot of investment in terms of C-stage funding from investors and entrepreneurs in Nigeria. And the reason is the fact that if you look at Nigerian entrepreneurs or businesses generally, when investors are looking for where to invest, they look at a lot of other parameters: the economy, the size of the economy, the people that actually they are investing in, which is the business itself and the management. And you've shown that the doggedness of Nigerian startup businessmen and corporate entities or corporate environments in Nigeria has actually attracted a lot of investment and interest in that space. And that, tells you why a lot of investors are really interested in Nigeria. Aside the size that we have a population of over 200 million people. Nobody's going to joke with that size in Africa. So a lot of people want to be there. But at the same time, before investors will come to the market and invest in the business, they have to look at the management, they have to look at the business, model and stuff like that. And they have to be sure that actually the business actually can scale up, and at the same time can give them returns over a period of time. So from all of these analyses, it's shown that Nigerian startups and the ecosystems have actually shown that a lot of Nigerian business have actually been doing well. Apart from that, another area that is key for us to look at is that investors actually follow what I call the head, kind of, or cluster kind of investment, which means that within the ecosystem space that are actually playing. So say, for example, investors are looking for some level of investment in Africa, and they narrow down to Nigeria, for example, which is part of West Africa. So within that space, when they see a lot of things happening there and they see that the returns that a lot of them are getting there is actually fantastic, you see them actually going outside there to actually make a lot of noise. And that attracts other accelerators or incubators, whether international incubators or international accelerators, who actually come to the market and invest in that space. And I think that's one of the reasons why we've seen that number, surpass all the other ones that we have in Africa. When I mentioned Kenya, South Africa, Egypt, and Nigeria market. So in my own view and in summary, I think that's actually been the reason why we've seen a lot of attraction from all these investors coming to Nigeria market.
Yeah, thank you very much, Steve Osho, for that insight. And I will summarize what you said in the 3 key points. And you said look at comparing Nigeria with other emerging markets in Africa, Nigeria still tops them in terms of investment when you talk about the likes of Kenya, South Africa, Egypt. And that's quite interesting. It speaks to you talking about the prospect of the Nigerian market, the fact that we have about 200 million people that tends to give us some level of edge over the other markets, and most investors will most likely look into the Nigerian market. Quite interesting. And the fact that businesses or startups in Nigeria also try to make noise as much as they raise funding for some form of incubators or accelerator programs, make noise in order to attract some more others to come join in the pool of funds. Thank you very much, Steve Osho, for that. And I will be moving to you, Taiwo Olatunji. So according to the report, the telecommunications ICT sector raised the highest funds in 2022. MTN raising multiple funds through commercial paper and bond insurances locally. We also saw startups like Fidia and Senchamp included in the list. The Nigerian telco industry seems to be actively raising funds, especially at the debt market, and have oftentimes been very successful, which kind of speaks to investor sentiment towards that sector. What do the sector have going for them, in your own opinion? So,
okay, thank you, Samuel, for that. I'll just start off from where Steve left. What works for us in Nigeria? We have a very population base. 200 million people have to pay for services. They have to talk to each other. They have to browse. That's what is supporting the telecom sector. Very healthy growth there. Increasing demand for data, fintech services will not abate, and we see that sector growing. But for that sector to going to deliver quality services, the players there have to going to invest in their network. And we all know that the telecom sector is backed by technology. Technology becomes obsolete in 2-3 years. So every now and then, they have to spend a lot of capex. Case in point, MTN, which is the biggest player in that sector, generated about 2 trillion naira in revenue. That's the only company that's ever done that much on the in Nigeria, by the way. Now, when you look at that, the revenue it generates, and you compare that with the capex spent, which is about 504 billion, they're going to need significant capital outlay to invest in their technology. Last year, MTN was able to raise about 265 billion naira from the market, 150 billion via commercial papers, and 115 billion through 4-year and 10-year bonds that it raised from the market. It goes to show that people see value in telecoms. They see that the sector that is really going to grow, very healthy, and the subscriber demand for the services that that they provide is not just going to, it's a necessity. We can't do without data, we can't do without voice. So looking at all of that and the network expansion that they will need to do with respect to 5G, they're going to need more capital outlay. The likes of Fidia and Senchamp too just goes to the notion that money will always attract, value will always attract money. And that's why Fidia and Senchamp were able to raise money. So in all, the ICT sector continues to grow. We've seen a steady growth of that within our GDP. It's contributing about 10 to 15% to our GDP now, and we see that getting to about 20% in the short term. So that sector is going to grow given the youth population base of the country and the huge demand for the services that the telecom sector is going to provide to the populace. Thank you.
Yeah, thank you very much, Taiwo. I will still stay on you because you really made some very interesting points about why investors or local and foreign investors will, of course, have positive sentiments towards the telecommunications industry. And that's because, of course, what they offer to us right now is more or less a necessity. Every one of us will want to use data, we want to use call. We are having increased fintechs who are also backed by telecommunications technology. And that's quite interesting. Their contribution to GDP also has increased in the last 5 years significantly compared to the previous 5 years. Yeah, very fine. But then when you also look at the fact that we want to digress a little bit into the economy right now. The CBN has also introduced some cashless policy in the past 2-3 months, which we expect, right, to an extent, to have had some form of effect in the ways and which the volume or the level of usage of some of these telcos banking apps, which of course has been dwindling in recent times. But what do you think that also speaks to the telecommunications industry? Do you think that's more positive to them going forward?
Thanks. Interestingly, I read an article about that last week, and we're just speaking that to the cash crunch challenges in Nigeria. And typically with human beings, what do you expect? People would look for backup mechanism to ensure that they earn money. So it's seen as the cash crunch is seen as a positive opportunity for Nigeria. And what is expected is that the likes of MTN with their Momo PSB license, Airtel, Glo, Nine Mobile, they should be able to deploy solutions to enable the common man trade on the road. You know, case in point, you know, why should we always pay cash for everything? If the Akara seller can over the use of USSD services, get money from somebody who wants to buy Akara, the guy will be very happy to get his money and store it somewhere in a wallet so that tomorrow you can use it to pay for something else or transfer it to his account. And that's what's happening. We've seen plenty pictures of even the Ewago seller putting account numbers on the port to ensure that he or she can receive funds for the food that they sell. So it's a basic notion that people want to survive, they want to make money. So they'll look for whatever means to ensure that they're going to earn that money that they were earning. So most of them are started looking for alternative solutions apart from cash to ensure that their livelihoods are not do not deteriorate in the immediate. So in summary, that sector, the cash crunch, it's an opportunity for telcos to increase their service offering and replicate what you have in Kenya and Ghana, where you have Momo in Ghana, with everybody using Momo to pay for it.
All right, thank you very much, Taiwo Olatunji. Can you confirm if you can hear me? Because I lost audio at some point.
Yeah, everybody
Yes.
got muted, sort of.
I think everybody got muted.
Yeah.
Oh, okay, great.
Okay.
So interesting insight there, and very true. The whole cash crunch is an opportunity or a blessing in disguise for the telecommunications industry, and we hope and that's a really different conversation, I think, for another day. The fact that Nigerians will be open to dealing with transactions, cashless transactions and whatnot, just like the likes of Kenya and Ghana that you talk. The whole of Kenya makes use of M-Pesa, and it has been growing significantly here over there. So it would be nice to see that happening here also in the African giant and this largest economy in Africa. I'll be coming to you now, Razak Ahmed. So the document really, as much as we had seed fundings, we had we had venture rounds, we had grants, we also had mergers and acquisitions during the year, and particularly we had many of those happening in the pensions industry, as well as expansion projects through acquisitions in other industries too. By your own from your own understanding, what are the factors contributing to the increased M&A? Because 2022 just seems like a year for mergers and acquisition, and then this has also been quite popular in the financial industry. So what's your thought as the factors contributing to this?
Yeah, thank you, Samuel. So I think the pension industry is a very unique industry, especially in Nigeria, given how far it has evolved since the contributory pension scheme started in 2006, 2005, thereabouts. It has grown astronomically since then. And the wave of acquisitions and M&As that we saw last year actually point to some of the strategic intents of the banks, those that are doing the major acquisitions. And I'll speak to two of them largely. Taiwo Olatunji was on the team of one of the acquisition. I mean the acquisition of Sigma Pension and by Access Bank Holding and Access Holding, and the merger and acquisition of Sigma Pension and First Guarantee Pension, right? And that was handled by was championed by Access Bank. We also had one handled by GTB, which was the acquisition of Investment One Pension and Investment One Investment Management, right? Even though those were formerly subsidiaries of GTB, it looks like the daddy came back to acquire the children, which was a good one. If you look at these two major transactions, all right, I think they point to the fact that the banks are trying to build a financial conglomerate. So they're trying to go beyond just provision of banking services to provision of other wealth management services, which is a good thing. Was it yesterday or 2 days ago? Zenith Bank is also going the route of the old co approach by incorporating a holding company, which will enable them also be able to offer other financial services generally. And from a strategic standpoint, I think it makes a lot of sense. Because if you look at the Nigerian formal sector, aside the telecom industry, which has millions of users, the banking industry comes second in terms of user base. So at least we can say that the banking sector has about 15 million unique users. If we are to go with the data and statistics from BVN, which gives them about 50 million users to cross-sell products and so on and so forth. And that's even outside additional 30, 40 million people that have never, ever been banked originally, right? So there is that huge opportunity, not just to bank people, but also to cross-sell additional financial services to them. So it makes perfect sense. But in order to look at why this is also interesting within the pension industry, I think it is important to look at this from two dimensions. The first is the structure of the pension industry itself. And then the second is the growth prospects of that industry. In terms of the structure, the industry is relatively concentrated. There are about 22 players in the industry right now. And the leading industry player controls about 37% of the assets under management, which is very huge by any standard anywhere in the world. And the second player comes around 7-8%. And technically, the first 5 players control about 63% of the assets under management, which shows highly concentrated industry. So that speaks to the first M&A that I mentioned earlier with respect to Access Holding. So the way I look at the Access Holding acquisition of Sigma Pension and then the combination of that with the First Guarantee Pension is, I think it's just a race to be the second player within that industry. Because First Guarantee Pension has about probably less than 1% of, or less than 2-3% of the market share, and Sigma Pension about 8-9% thereabout. So the combination of the two of them will likely give them about 10% of market share, which is still significantly lower than the first, about 37%. So it's a race to be the second biggest player within that industry. So we might begin to see more of that because with GTB acquiring Investment One is a very small player, less than 1% of assets under management. But I see that Investment One acquisition by GTB as a launch pad to actually enter into that, to entirely launch into the pension industry. How that will grow over time, will they be third, will they be fourth, will they be fifth? Can they actually be able to sweat the equity base or the brand equity of GTB to be able to catapult them into the first 3, first 4, first 5 market player? I think that is a question of time, or whether that will happen or not. But I think that will be one of the major priorities of the management in doing that. So overall, the industry structure is concentrated. We have a clear leader, like clear leader, and others are coming on to be the second, third, and so on and so forth. Then the second part is the growth prospect of the industry. As I mentioned earlier, the industry's evolution has been very, very interesting, growing to current assets under management of about 15 trillion and user base of about 10 million people. That's huge by any standard, given our per capita income. And if you are to look at how that industry will grow over the next year, 2, 3, 4, or 5, I think there are some estimates that that industry might hit about 20 trillion by the end of 2023, given that it is currently at 15 trillion. That would be about 30% growth. That's huge. But again, we also need to consider the fact that significant part of that growth is coming from two factors: periodic contribution, and then the the returns that the pension industry are also delivering onto the fund. So, and if you look at the numbers, largely like 10 million people today, if you look at that relative to the labor force in Nigeria, it shows the potential growth, even though that might not come easy, because the expectation is that to be a pension user or a pension customer, you must have a formal job, right? So the question is, how many formal jobs do we have in Nigeria today? Even though we have about 40 to 50 million people within the labor force, do we have 30 million formal jobs that will be enrolled within the pension industry? So overall, the driver of that growth, whether the number of people within the pension pool will move from 10 million to 20 to 30 or 40, is a function of, one, how much of economic growth are we experiencing every single year, right? In the past 1 year, the number of subscriber growth wasn't that really strong. And that might speak to the fact that we've not been able to create a lot more of formal jobs, because today, the pension guys are actually enjoying a lot, right? It is against the law for you not to enroll your employee within the pension pool, which means even though if they don't do any marketing, as long as there is employment generation year in, year out, then the possibility is very high that their subscriber base will increase. Then the question will be whether the subscriber base will go to number 1, number 2, number 3, or number 4. But industry-wide, the subscriber base will increase as we increase more formal employment, right? So it's a good industry to be in. Taiwo Olatunji, well done. That said, the other part is the economic growth that I mentioned, right? If the economy is booming, jobs are being created, formal jobs are being created, then the industry will grow rapidly. So I won't be surprised if the industry actually hits the 20 trillion mark by the end of 2023. Then the last part I'll speak on is on the recent micro pension that was initiated in order to capture the less formal sector and bring them under the umbrella of the pension scheme. Well, I think maybe we still need like 2, 3, 4 years to determine whether that's working, because currently we have just about 100,000 micro pensioners actually being enrolled. I'm not so sure if the existing players within the pension industry actually see the micro pension as a profitable segment because of how it is designed. Whether it is profitable or not, I think from the insight we've seen, most of them are not probably seeing it as a profitable segment. But again, in the next 2, 3, 4, 5 years, we might begin to see whether it is a segment that will grow significantly or not. But there is an opportunity there because we have millions of people that are operating within the informal sector and they do not have pension. And pension within the overall wealth management industry is an important safety net that anyone working at all, anyone generating income, anyone spending time to work should have. So it is a priority that they must have it. Whether they will have it or not, I think is a question of whether the regulatory framework currently will work or not. So, so generally, I've spoken on the structure of the industry, and then I've spoken on the growth prospect of the industry. I think the growth prospect of the industry is superb, given that we have just 10 million people and we have assets under management of about 15 trillion naira as of today.
Spot on analysis there. Thank you very much, Razak. And I have taken down some notes from what you said. And one of those things that struck me, but before saying that, let me just probably go into the numbers. So according to numbers from the pension, PENCOM, the total assets under management for the pension industry as at December 2022 was 14.992 trillion naira. That's approximately 15 trillion, just as you said. And then the number of RSA membership was around 9.86 million as of December also, which is also more or less 10 million naira. And interestingly, most of the funds under management are invested in federal government securities, just as expected, based on the pension framework. And then we saw that in 2021 towards 2022, the PENCOM also increased the minimum capital requirement for pensions industry from 1 billion naira to 5 million naira. And that more or less also encourage many of those companies to probably merge, put their funds together in order to meet with this requirement. I think the numbers have reduced to about 19 now, or 20. It was 22 here, but I think it has reduced. I'm not so sure about the numbers now. But something that really struck me, Razak, was the fact that pensions, the pension players are enjoying right now, because as much as you keep employing, you have more people on that your registration, and that just I find that quite fascinating, because now if you're having so much mergers and acquisition in the industry, especially for companies that are holding, that have holding structure, that have many subsidiaries and have many employees. So it means that the more subsidiaries you have under you, the more employees you have, probably the bigger the number of contributors you have under your pension scheme. I don't know if if you agree with that, Razak.
No. I'm not sure we are on the same page on that. So what I mean by employment, so that's what you just described is probably just the number of staff of the pension fund manager, right? So what I mean by employment is how many employments have we created within a quarter as a country. It doesn't matter if the employment is from the telecom industry, from agric industry, from banking industry, or from any other industry. As long as that employment is a formal employment, by law, the employer is expected to enroll the employee under the pension scheme, and they are meant to contribute a percentage, and the employee is also meant to contribute a percentage. So even if the pension fund administrators don't do any marketing at all, well, they do marketing, but let's even assume they do not do any marketing at all. As long as we have employment generation every quarter from a macro standpoint, right, the pension pool will always increase, because it's against the law not to remit pension for your staff. So it's an interesting law, even though it is for our own self-interest, because I think the law assumes that an average person should have pension, because by the time you're 60, 70, 80, you might not be able to work anymore. So you should have a safety net that you fall back on. So I'm talking about the employment generation from a macro standpoint, not from the company perspective.
Okay, thank you very much for that clarification. And that speaks to the level of growth that we have in the economy. Although that number, exactly, in terms of number of contributors, has been slow in a couple of years, as much as you would expect a population of over 200 million and probably over 80 million active workforce. But that also tends to give you an idea about our level of unemployment right now, because as of last stated, we are still around 33% in terms of unemployment rate. But very, very spot on analysis there, Zach. Thank you very much for that. And then we're moving to the next segment of this session. But meanwhile, from our audience, we have a number of them here. And if you have questions, please, you can always go to the Q&A session and ask questions. I would try to read some of them for our guests and analysts to respond to, but for some of them also, our guests can also respond to them on the chat room. That's for those that are specific to them. But just bring in your questions, throw them in, relating to the deals, the business environment, relating to the macroeconomy also, and we will definitely find time to read them before the end of this session. So now, to the end of the second part of this session, I think I have Aditaya with me here. Aditaya, are you here with us? Okay, I'll go ahead. And then Steve, I'll start with you here. But then the Nigerian economy grew by 3.1% in 2022. That's like a slow growth in terms of annual growth compared to the previous year, 3.4%. Meanwhile, we had some fastest growing sectors. We have some sectors of the economy that recorded impressive growth relative to others, and those were the banking sector, transportation sector, ICT, trade, and construction. And interestingly, again, those set of fastest growing sectors in 2022 actually were top on the list of industries or sectors that raised their highest amount of fundings in our nairametrics and 2022 deals book. So the fintech industry raised about $777 million in funding. The financial services sector raised about $700.38 million. Transport and logistics raised about $745.7 million. The telecommunications industry raised about $1.05 billion. Now, Steve, the Nigerian economy has been feared to face dwindling foreign inflows in 2023. And that's no cap, of course, the whole election thing. There's a lot of uncertainty around the Nigerian economy. But on the back of the announcement of the president-elect, which was done about 2 days ago, do you see that narrative changing? Or do we still expect that the amount of foreign inflows will still go down? Don't forget, it has been coming down since COVID era, and we all expect some level of uptick, especially as it relates to the external reserve, as it relates to the level of economic activities in the country, as it relates to our exchange rate, because at the end of the day, many fundamentals in terms of macro numbers also rely on some of these indices that we state here in our nairametrics deals group report. So do you think this narrative is going to change now that we have a new president-elect? And then maybe you can give us some insight as to sentiment around some of the policies of the new president-elect and how that might also impact on foreign inflows. That's okay. Steve. Yeah, thank you.
All right, thank you, Samuel, once again. I think this session has been very intense and very educative from all the other panelists. So I'll take your question in two ways. I'm happy you touched on the GDP number that was just released. And if you look at that number, you'll notice that the major contributors to the GDP growth or the numbers, even though the number they released here for the last quarter, if you check it year on year against what was done in 2021, slightly lower than that. But again, we've seen slight growth because a lot of activities have actually, we begin to see a lot of activities within the sector. So, but you agree with me that the non-oil sector is still contributing more to the GDP than the oil sector, which means that there is diversifications of revenue actually moving away from the oil receipts or oil revenue into non-oil sector. And if you look at within the space we are talking about here now, whether you're talking about banking, insurance, e-commerce, fintech space, agri sectors, and so on and so forth. That sectors we're talking about is being categorized as being characterized by a lot of startups and SMEs, and that explains the reason why we're seeing quite a lot of numbers in terms of the seed raise that we actually talk about in terms of number you roll out when you are presenting the numbers earlier and what are actually attested or confirmed. And what that tells us is that that stage is still going to be a major contributor to Nigerian GDP in the long run, as long as we're actually moving away from dependence on oil. Even though we've seen the electoral law, sorry, the new reform bills on the petroleum bill, on the act, then we've seen that will probably attract more investment, from outside the country. But outside that, in terms of the numbers of the SME we have in Nigeria and startups, I think majority of them will still be responsible for contributing to the GDP growth in Nigeria. And coming back to the question you asked about the new regime, and now that we have a winner at the last elections and actually been announced by INEC, waiting for swearing on the 29th of May. I think the major challenge that we had that slows down the flow of investment from offshore investors or investors from outside the country, either through FDI, FPI, or people that are trying to invest in a lot of startups in Nigeria, was mainly because of most of the fiscal policy of this present regime that is actually going now in May. And at the same time, the response to a lot of myriads of challenges that we have. A lot of business investors have actually shown apathy to Nigerian market because of this. And I think I just touched on the numbers earlier when I was talking. We've seen a reductions in the FDI portfolio from 2018 till about now, 6.5 billion in 2018, as at second quarter of 2018, to about 1.5 billion in 2022. That number, kept, going down. So, and the challenge is because a lot of people are actually reading, the atmosphere, the economic policies of the government, the fiscal policy of the government. And even you could see that from the numbers we're actually churning out year on year on our budgets. Nigeria has been running the budget deficit for over 7 to 10 years now. And at the same time, we've seen that the revenue size of our budget is actually reducing year in, year out, while our recurrent expenditure is actually expanding. So that's one of the problems we've seen a slowdown. But if you look at the manifestos of the APC president-elect, that's Bola Ahmed Tinubu, you will see that there's going to be a slight shift away from what this present regime have been doing. I think the manifesto touched on how he wants to tackle the economy, how he wants to actually shrink or reorganize the structure of government, how he's going to contribute to SME and startups, is part of his policy, how he's going to touch on education, how it's going to affect health sector, and a whole lot of other garments of the economy. You've seen him talk about oil and gas, how we can, use oil and gas sector to contribute a lot to our revenue. And you've seen that, he has said a lot about how we can use gas, and how you want to compete with Russia in terms of, channeling the gas resource to the rest of Africa and even to Africa. So that tells you about how, the administration, the new regime will look like. And you could see from even the report that was released by Bloomberg late this week and by JP Morgan, trying to say that they are actually very positive and bullish about Nigeria now. We've seen a bit of rally on Eurobonds towards the end of the week. We've seen that most of the policy or investors or traders are actually trying to look more into Nigeria directly. And that what happened is that you're going to see more flows in terms of FDI and FPI coming to the system, because if you create an enabling environment to attract some of these investment, they are definitely going to come. And from the policy regimes on the manifesto that we've seen from the president-elect, it shows that it's actually moving in that direction. So I can only see that it's positive, despite all odd. I think we've seen a lot of resilience from startups and SMEs in Nigeria, and I think that's going to continue, despite the fact that we don't have that infrastructure that supports the system. But imagine if you now have a regime that places so much emphasis on the infrastructure, that places so much emphasis on things that actually can support the business. It means that what they need to do is actually to do the business and attract more investment coming from outside the country or within the country. I think that's my view going forward.
Thank you very much, Steve. Sure. It looks more like we're going to be moving towards the direction of some level of growth. And as you said, we've been seeing some level of bullishness from the international community. Quite interesting. And then we're already seeing some questions coming up from our audience, and we'll sure to answer them. There are quite a number of them so far, but interesting. Yeah, we'll get to them very soon. But please keep bringing in your question, because this conversation is quite, it's getting very interesting, and we're still right on track. I am moving to you now, to Taiwo, right? Now, Steve has spoken about the current government or the new president-elect and how that might shape into the business environment and what the international community perceive of the Nigerian economy going forward, and how that might affect businesses from raising capital. So in your own opinion now, from your own expert opinion now, from a business perspective, what should Nigerian businesses be doing going forward in 2023 in a bid to attract capital domestically and foreign sources? Because in fact, one of the issues around Nigerian businesses and CEOs and entrepreneurs has always been the fact that they do not know how to get capital. They do not even know where to go to get capital. And then banks' interests are high in some cases, especially now that we have when the high interest rate regime. So in your own opinion, what do you advise Nigerian businesses to do going forward to attract funding?
Thanks, Samuel. In capital raising, there's one thing I tell people: money that goes to the investors, give to companies, businesses, they expect that the money should come back. So what do they look out for? The first thing is that you have a very well-defined business plan. And when I say business plan, it shows you've done your own work, you understand the market you're addressing, there's feasibility, viability for the business to generate revenue and be profitable in the near term. And when I mean near term, maybe 3 to 5 years, if you're a startup, and if it's a project finance, in 5 to 10 years, that generates very good cash flow, and that's how investors look at. Those are one of the first things that they look at when they want to invest their money. So for you to attract them, you have to have a very well articulated plan, thought through, shows a compelling business story, and that ensures that you build trust. At the end of the day, trust is the key component you're trying to build with yourself and the people who give you money. Secondly, you need to track your financials. You need to show that you're quite disciplined, that you are prudent, you can manage the resources that they give you. We've seen cases where businesses have raised money, but the team were not disciplined enough or focused enough to keep to the plan which they set for themselves. They burnt out the cash and were not able to deliver as promised or what they said they would do. And the third thing for investors, what they look out for is that you have the right team around you. And this goes to startups or whatever businesses. They look at who are the people in the management team, who are the people looking at the managing the company, how do they manage it? Is the power in one person? Is there a human risk? Those are the kind of things they would like to check out before they give you money. Corporate governance is also key. They want to be sure that you're holding yourself accountable to all your stakeholders, to your customers, to your employees, to your board members, and ensuring that you do the right things when you say you would do them. Lastly, I think if you have an idea or a product that addresses a very large market, that's the way you attract capital. There's no way. We've seen deals that when you look at it, it addresses very niche market. While niche markets are not bad in themselves, they're quite risky, and in times whereby there's economic challenges like we have in Nigeria, niche businesses typically are not what people are looking at. They're looking for businesses that can scale fast, and use technology to scale very fast, in fact. So those are the kind of businesses that people look out for. If you look at the example of the startup lending firm, Frank, that was acquired by JP Morgan, what was the error? What did they do right and what did they do wrong? They were able to show that they had a compelling market, students, loans, and they had a database. JP Morgan also saw that there was some synergies to get from there, from acquiring the startup, with a good database for them to leverage on to hire people within the bank. And that's why they acquired the startup lending firm. The data there was going to be useful for them. A key thing that didn't go well for that acquisition was that the data was falsified. Allegation of data was falsified, and JP Morgan said the data that they were provided was not to the 4 million users that was promised by the team in France. And the team in France said JP Morgan, wasn't sure what they bought and that the data is there. We just need to know how to use it. So what am I trying to say? While they were able to attract finance at the end of the day, what failed for them was the fact that the data, and that speaks to the second point I raised, that you should maintain a good financial system and ensure that you can deliver what you say you have a target market. The data there wasn't right, and it failed them. So all in all, to attract the right type of capital, have the right team. Your corporate governance must be on point. Your business plan must be well defined, and it shows a compelling business story. And that you have a product that addresses, a large market and can scale very fast using technology. Thank you.
Thank you very much, Tayo Olatunji, and that was quite apt and very, very insightful. And I was taking notes because, of course, you never can tell. So for the benefit of the public who probably did not get that, some of the things you need to do as a business to be able to present yourself with the opportunity, or when the opportunity arises to raise capital, is to be able to tell a compelling story with your very well articulated business plan, be able to build trust also in investors through that your business plan, track your financial, and then be prudent in your spending. And that's true. We've had cases of many startups over the years who have raised fundings through different forms of channel. And after raising funds, you just don't hear about them anymore. It just appears that they've gone. So I think that's a very, very, very important thing that businesses really need to do. The third one is to have the right team around you, create a very good management team, also ensure corporate governance, very good one also, because those are the things that investors are looking to before they buy into your business idea. We are getting towards the end of the second session before we move to the Q&A. But the last question I'm going to direct now to my last question is going to go to you, Razak. You all have a lot of questions in the Q&A session, and then we are going to get right about that. Meanwhile, for the record, for our audience, this deals book report that we're talking about is a compendium, it's a document that compiles all the deals that were consummated by Nigerian corporates in the year 2022. We do this every quarter, and then we do the complete report by the end of the year. And this that we're launching here is the report for 2022 that covered around 320 deals, raising over $5 billion and over 2 trillion in terms of Naira equivalent in the year 2022. And quite the money spread across different sectors of the economy, raised both from local and foreign investors, many of which the funds were used for capital, for expansion, business expansion, capital investment, boosting of the balance sheet, and whatnot. So quite interesting insight that you will get from this document by the time we officially launch it for downloads on Monday 6th, and that's in 2 days time. So please, you can we have a link on our various social media handle. You can register so that immediately we are launching, you get it direct in your email and be one of the first set of people to enjoy from the wealth of information that is in the document. So yeah, Razak, the Nigerian economy, the Nigerian startup system. What is your outlook for Nigerian startups going forward? And then what are the key policies or factors that you think will shape the startup industry going forward?
Yeah, thanks for that. I think I have a positive expectation. That might be biased because I'm in that space, but I think my bias can be justified, right? And why I'm saying the expectation is largely positive is that if you look at what happened in the last 6-7 years or even 8 years, we've seen significant growth, not just in terms of numbers of startups addressing key problems within, across different sectors. We've also seen significant capital inflow to these startups to enable them, channel capital to solve problems and scale the companies. And we've seen, significant amount of success stories. We've even seen exits, right? which is quite interesting, knowing fully well that the startup ecosystem is still less than 10, 20 years old, and we're already seeing exit, even though it's not as recurring as one would have loved to see. But one thing that is important is that this growth that we've seen over the past 8 years happened despite Nigeria having one of the worst macroeconomic indices you can ever think of, at least relative to the last 20, 30 years, right? So despite all these macro headwinds, we've recorded significant growth in the startup ecosystem. That shows that once we fix our macro indicators, our macro indices, you can begin to imagine the level of growth that will happen within that sector. And the reason for that is very simple. There are a lot of problems that need to be solved, right? And as long as there is appetite for capital deployment to solve those problems, the startup ecosystem will continuously flourish. Then the other part is that in the past 6, 7 years, we've seen significant growth in some important startups, which I would call like the first wave of startup growth. And those startups are forming the backbone for other startups to build on, right? So if you look at the journey of fintech in Nigeria, for example, the first problem was that of payments. Because if you're building a fintech solution, irrespective of the solution that the customer ends up getting, there has to be an exchange of value, right? That exchange of money. That exchange of value needs to be taken care of by exchange of money. So we've had significant growth, not just in terms of operations of payment companies. We've also seen significant growth in terms of capital deployment to payments startups within the fintech ecosystem. So the payment companies actually serve as the backbone for other companies to build on. So if you're building a logistic business, for example, there is a payment element in it. So you can build your logistic business deploying the payment solution to do that. If you're building a wealth management solution, there is a payment element. So you're building that wealth management solution on top of that payment infrastructure. Maybe a good way to look at this is to look at the Nigerian banking industry without NIFs, right? I'm not saying the banking industry won't exist. It will still exist, but it won't be as comfortable as we currently have. So the value that NIFs provide as a payments backbone for the banking industry is the same value that payments fintech companies actually provide for other fintech solutions within the startup ecosystem. So given that that first wave has already happened, I think we are at an inflection point where you begin to see significant growth of the second wave. And the second wave will go beyond just payments. The second wave will go into problems that are deploying payments as one of the inputs to solve a larger problem, right? So that's the first part, which actually points to the fact that the future of the Nigerian startup ecosystem is actually very, very positive. Then the second aspect is about the policies and factors that can actually drive that sector. Well, I think there are a lot of them. The first one is we need to be able to tame our terrible macro indices, right? And this goes beyond, these are some political dimension to it. Whether the new political dispensation that we'll be going into from May 29 will solve that problem or not, I think the jury is out. But at least we have a sense of understanding that there is a transition, right? So whether that transition will be a transition for good or otherwise, I think is a question of time. If we have our macro indices tamed, like the galloping inflation that we currently have, no foreign investor or even local investor will make informed business decision in terms of capital deployment when you are recording inflation rates of 20%. No foreign investor or even local investor will have the appetite to bring in money or capital when you are having extreme volatility within your FX markets. The same thing applies to unpredictable monetary policy or fiscal policies, right? Those things have gone way beyond what is predictable or what is normal. And when you have things like that, they affect the amount of capital flow, not just for startup generally, but for the entire economy. And that speaks to why we have decline and significant decline in foreign direct investments in the country. So the first thing is to be able to tame these macro indices. But interestingly, we've had a series of policies in the past 2 years that are very vital in determining the future of startup ecosystem in Nigeria, and not just even startup ecosystem, other matured industry as well. And I'll speak to two of those things. The first is the Startup Act, which was just passed last year. Even though the implementation is still very, very early to judge whether the implementation will have significant input into the startup growth. But I think the intents and the contents of the Startup Act speak to how ambitious the government is in supporting startup ecosystem growth generally. So that is very commendable. So the extent of implementation of that Startup Act will determine the impact it will have within the startup ecosystem. Then there was one that was implemented, that was approved late this year, which is the Business Facilitation Act. It might sound, I'm not sure people actually spoke about it a lot, but I think there are a lot of items there that can enable startup grow and existing businesses grow as well, especially when it comes to issue of regulatory interaction, regulatory engagements, and engaging major agencies of the government that are meant to facilitate the development of the business environment generally. So overall, I think my expectation about the startup ecosystem in Nigeria is extremely positive, given the state that the startup ecosystem is today. Is extremely positive given the opportunities that exist. Is extremely positive given the amount of problems that we face on daily basis, and is extremely positive given the nature of policies that we've seen the government, develop over the past few years. But overall, we need to bring forth some interesting macroeconomic indices to enable us, capture the growth more appropriately.
Yeah, thank you very much, Razak, for that insight there. You're quite bullish about the startup ecosystem. And you talked about the startup bill, the startup act now, then also the Business Facilitation Act. I think that's quite interesting because Nigerians and analysts generally have not really spoken about that so much in recent times. So I think that's going to be interesting for people to start considering. And then you said that we're going to be at the second wave of bullishness in terms of the startup ecosystem, not just because that there's going to be deploying of payment solutions, but because those payment solutions will now be used to solve larger problems. And which larger problem is there right now than to solve the cash crunch that Nigerians are facing? It would be interesting if we can solve the whole on seamless transactions that Nigerians are facing right now with various banking apps. So it would really be interesting to see how, especially the fintech industry, are able to help deploy some payment solutions. So right now we are in the Q&A session, and we have quite a number of questions. I will try to dish them out. So Razak, you're still on the spot. The first question here says, what would your advice be to someone who has a huge pension contribution but is relocated from Nigeria? Would it be to withdraw the 25% and invest it in another sector, or keep the entire contribution back in Nigeria? Interesting question. So Razak, what would be your response to that?
That person must have Japan. I'm guessing the person has moved on. Okay. Well, we are holding forth. We're holding forth. So I'm not sure I can give you an advice, frankly, because I really don't know much about your current situations. But I'll speak generally with respect to what is obtainable within the pension framework, right? So when someone relocates from Nigeria, there are provisions within the Pension Act that allows there are provisions within the Pension Act that stipulates what will happen. And normally, the Pension Act doesn't allow you to have access to your pension contribution if you relocate until you retire or you turn 50, whichever one comes first, right? So the whole idea of assessing 25%, I think, speaks to what is obtainable if you lose your job, or if your job is terminated. That's what the 25% is about. But normally, if you've relocated from Nigeria, you do not have access to your pension funds until you retire or you turn 50. I think the whole idea of assessing the 25% is probably a loophole that people are taking advantage of by saying they've resigned or their jobs have been terminated, and so they can have access to 25% of the pension. But overall, if you have relocated, the Pension Act doesn't allow you to have access to your fund until you retire or you turn 50. I hope that answers that.
Yeah, thank you very much, Razak, for that response. I'll direct the next question to you, Taiwo. This person says, what alternative investment windows are available for the Nigerian investors apart from the traditional fixed income and equities? And where do you see the price of equities growing this year, 2023, on the back of a new government coming in by May 2023? Taiwo, you're on the spot here.
So alternative investments out there, crowdfunding platforms, they've started coming up. They're looking to crowdfund for different solutions. Typically, these solutions that, or what they are crowdfunding for, used to be available to only institutional investors like VC funds. But crowdfunding platforms are democratizing investments to enable people to take similar risks, but at a smaller scale. So crowdfunding platforms are available. You have your asset management investment platforms to invest. You have the Eurobond market. And you can do that in piecemeal approach with your asset management firm, whereby you can diversify your income into dollars and invest in Eurobond funds or notes, and ensure that you diversify your portfolio. Without saying real estate is there, but that is quite capital intensive, so you need a lot of money to do that. You have your, I'm trying to think of the ones I've done, so I don't lead people astray. I think that's largely where you can put money at. I wouldn't lead you astray. If you have significant money, you can go into private equity, venture capital, and play within that space and ensure you get some good returns. So those are the places where I'll typically advise people to invest. But again, the equity market, the debt markets, from time to time, they provide very good opportunities for people to make money. So stick to those ones. They won't fail you. Thank you.
Yeah, thank you very much, Taiwo, for that very quick response. The questions are really coming in Drew. So here I will direct this to Steve. This is quite economical and then interesting. So he says that why has the oil sector relapsed in growth in terms of contribution to the Nigerian GDP? Of course, it has been contracting for a while, so it's only expected that the contribution is going to go down. So can this be traced in any way to the subsidy placed on the oil sector?
Okay, that's a very tricky question anyway. But I think, in my view, what has been responsible is more of the oil theft in our Niger Delta area. Production has reduced significantly from what we used to have, about 1.8 million barrels per day in production, to average of about 900,000 barrels per day, and that has actually impacted significantly or impaired significantly our numbers in terms of how much we actually can accrue to reserve. From the budget we've been rolling out since 2019, 2020, 2021, you could see that we are barely doing 40% of those targets in our budget cycle. So, and that was actually responsible for that. Outside that, I think another area we have to look at is in terms of security. The security of some of the IOC operating in the field in those areas are actually being somehow jeopardized somehow. And that significantly reduce, apart from the theft, reduce the level of production that actually happens in that sector. And there's no way you can run away from that number. Once you have those disruptions in terms of production, it's going to affect how much you actually produce in a day. And as long as that happens, it means that the kind of revenue that has been projected from that sector would definitely reduce. It's not much about the subsidy, because the subsidy is actually still on till mid this year or till May this year, when this present regime will go, depending on what the new regime will now say in terms of whether they want to continue the subsidy or they want to disallow it in the next dispensation. But from the budget that has actually been released for this year, you will see that subsidy is still being paid. And that is not the reason why the contribution to GDP from the oil revenue has actually reduced. It's more of the oil theft, security within that space that actually threaten the operations within that sector.
Thank you very much, Steve, for that question. We have Aditya here with a question. He says, I'll direct this to Razak. I want to ask about capital pools of Nigeria. What can we do to increase the capital pool in Nigeria? For example, the pension industry has slightly helped, and this has had a net positive effect on the NGX and the capital market. How about insurance, endowment funds, etc.? My major thought is creating capital formation within the Nigerian economy so that for startups, the whole value chain will start and end in the Nigerian market by startups raising and exiting in the NGX. That's quite a long one, but I guess you get the question there, Razak.
Yeah. That question has some nationalistic views. But again, there is nothing wrong in having growth in the domestic capital pool. And in fact, it is one of the critical factors that can enable the development of our startup ecosystem and even enable the development of, capital sourcing for more established entities. But that said, we also need to put into consideration the fact that there is globalization, right? And the globalization wave is even stronger than what it used to be because capital moves across borders and there are global players who are moving capital, across different countries, across different sectors, across different initiatives. And I wouldn't say we shouldn't develop our local capital pool, but I would rather say we develop the local capital pool while also taking advantage of the global capital pool. Because one, to develop the local capital pool, it's not something that can happen overnight. It is something that would take a long time to happen. It's a process. And it's a function of how big the economy is. It's a function of the per capita income of the country. It's a function of the amount of capital that has been formed over time as well. For example, an average American has a per capita income of about $50,000. And within the startup ecosystem, an average American can put in 20,000, 30,000 check for a pre-seed or even a seed round company, right? And without even so much due diligence, because it's a risky endeavor, it's a seed stage or pre-seed. For the Nigerian market, that's a local pool within the US market. For the Nigerian markets, for example, how many people have that kind of funding to be able to support startup development? So it's a macro question, right? We have a GDP of $500 billion, average GDP, average per capita income of about 5,000, 4,000, thereabouts. So there is a natural constraint there already. But as we grow economically, that local pool will definitely improve. Also, I think regulation is also an important factor here. For example, you mentioned the pension industry, and the success we've seen within the pension industry today can, to a very large extent, be attributed to the Pension Act that was developed in 2004, 2005, thereabouts. Without that Pension Act, I doubt we'll have 15 trillion naira today within the pension industry, right? So there is a need to leverage policy formulation in the right direction to enable capital formation. So for example, I remember as far back as 2008, 2009, even before then, there has always been, the Nigerian insurance industry has growth potential. But between then and now, that industry hasn't grown significantly, right? That doesn't mean we do not have the number of people in Nigeria that need insurance. It doesn't mean we do not have the companies offering insurance products. There is just something fundamentally broken that's, can't just enable the insurance industry to grow right now. Let's even take like motor insurance, for example, third-party insurance, not even the comprehensive insurance. For third-party, ordinarily, you should have it. It is the law. But because the law is not fully implemented, and it's extremely difficult to implement within the Nigerian setting, it is distorting the growth of that industry. If the motor insurance law is fully implemented so that every vehicle insurance rather, every vehicle in Nigeria as a third-party insurance and not the fake 5,000, 6,000 naira that people get, that industry will grow significantly. And if there is proper implementation, right? So there is a lot more that can, and that insurance can enable, a lot of capital formation because they manage pool of capital. They can use that capital, deploy it into different industry and manage it, different assets and manage it. So there is a lot. While I agree, we need to grow our local capital pool, no doubt about that. I believe strongly that it is not something that can happen overnight. It is something that takes time. And some of the factors responsible for domestic capital formation are macro factors that takes a lot of time before they get formed. While doing that, we shouldn't also close ourselves against the opportunities that exist from global capital flow. There is nothing wrong in having the two go side by side. But yes, it will be an interesting dynamics to have local companies funded by local capital and exit happening on the NGX. Well, it's an interesting proposition, but again, people might say they want more ambitious global focus. Instead of listing on NGX, probably the guy wants to list on New York Stock Exchange, and you won't blame him. Or he wants to list on London Stock Exchange, you won't blame him. So I think it's about making the economic incentives really aligned with local players. If it benefits a company to list on NGX as against listing on New York Stock Exchange or London Stock Exchange, they will list on NGX. So it's about economic incentives, really. So you can't force people to do your biddings. You have to provide the economic incentives to align their interest with the interest of the local ecosystem.
Thank you very much, Razak. I take that very well. There's nothing bad to have both. We're already seeing in the NGX that contribution in terms of transactions at the NGX is now dominated by domestic players. I think in about 2 to 3 years now, compared to foreign participation in the market. So yeah, it would be interesting to see a mix of funds moving around in the economy, both from the domestic side and then from the foreign side. We seem to have a lot of questions. I will try to start attributing them in two so that would at least cover a significant amount of them. And for anyone that we are not able to answer live here on the session, our Nairametrics team will pull them together. Our guests will answer them, then we'll post them on our social media handle, and then you can see the response there. I'll direct this question to Taiwo. Adetayo here is saying that, is there any hope for increase in FDIs and FPIs with the current interest rate regime of the federal government? And then I will also couple that with another question from Precious Adeleke, who says, do you think the new regime, what do you think the new regime means for the foreign exchange improvement in the mid to long term? And he says that we've seen some level of strength in terms of the local currency in the past few days. So Taiwo, what's your take for those two questions, FBI, FDI, and then foreign exchange?
Okay, thanks. For FDIs, I think without given the initial signs that we've seen with the Tinubu presidency, FDI is likely to increase in Nigeria. Why do we say this? His posture, business posture, has always been investment focused. And right from his time as governor of Lagos, he was the first person to broach the idea of independent power projects in Nigeria. And today you have independent power projects across the country. So for his government, it's expected that FDIs will increase as it's a market-focused government that would allow private sectors to come and do what they need to do. With respect to FPIs, I think that will take a bit of time. And why do I say this? We still have the FX issues in Nigeria, whereby we have the currency trading at multiple rates, the official and informal windows. Now, if you look at what needs to be done in that sector to attract FPI, I think given the posture of the current CBN governor, we think that might still put the FPIs at bay for the meantime. What will enable FPIs coming is to for them to be able to go out whenever they want to. They don't want uncertainty in how they bring in and take out their money. And that's around our capital control issues and them having FX available to service that market. Yeah, so what do we think the new regime means for foreign exchange in the medium to long term? It's like I said, it's market focused. We expect them to drive investment with FDIs bringing in money and you having more export with a government like Tinubu. What is expected is that exports will increase, FDIs will increase, and what does that mean? Dollars will increase in your economy. With dollar increasing in your economy, the naira can strengthen. And we can use our reserves to, when you have a strong reserves, you can use that to stabilize your currency and, you know, do some key investments in the medium to long term. So I think those two questions I've answered them, and that's how I'd like to take them. Thank you.
Yeah, thank you very much, Taro, for that response. Steve, we have one question here. He's saying that how can fintech sector turn the current challenges of cash crunch into opportunity in transport sector? That's interesting. So for instance, considering electronic vouchers to commute commercial buses. So how can they do that? What's your take there?
Okay, I think it's for me, and you know, which I believe that most Nigerians, the spirit of entrepreneurs actually help us out in that area. Every challenge is an opportunity. So whatever challenge we have now, we actually can turn it around, and especially for the fact that we're having the drive in financial inclusion and all of that. And with the emergence of all the e-commerce and the fintech companies actually rising, and with the seed fund actually being gotten from that space, which means that they actually can scale up and increase capacity. We've seen part of that of what this person that asked the question being practiced by Lagos State already. Some of their public buses, I'm aware that some of them actually use like a cowrie card to actually to commute within states. So I think that's an opportunity. And I know is it last summer now, or the Lagos State Transport Agency is actually very positive and bullish about that. So it's one area that's a lot of investments in fintech and in those areas would go to, and is something that a lot of people that are actually operating within that space to look at. We've seen a lot of that visibility when you go to some beach resorts in Lagos. How some of those, cards and vouchers are actually being used to actually access the place, and I think that is increasing all around. So if that is actually moved to the transport system again, now that we have the blue rails and the red line actually coming through, with always having to ramp up or to phase out, the rickety buses in Lagos and move up with the new millennium buses and transport system from the last ride and all of that, the Lagos ride and all of that, LAD ride, and the some other, what do you call it now, Uber or transport companies are actually operating in Lagos, especially because from what I've seen so far, I think Lagos is actually driving that sector aggressively, and you will know why, because of the number of populations in Lagos. 20 million is not a joke. So I think it's something that I see a lot of opportunity there. Like I said, every sector will have a challenge. We always have people who are thinking around where the gaps are and how to actually, make sure that they catapult that into success.
Yeah, thank you very much, Steve. It should be interesting to see where bus conductors start having POS machines. So yeah, 500 naira, 400 naira, you just pay with your ATM. That would really be nice, at least for the interim. We have some more questions here. Ajibola Olatutor said, could any of the panelists provide information on investors that can fund bankable real estate development, like joint venture partners? So I think from here, by the time we'll publish the deals book report on Monday, Monday, you will get information of some of the very many investors that invested in different companies and different startups. So you could be able to streamline it to real estate developments or real estate companies in the document and see the kind of companies that invested in them. That would probably give you some more insight. Chinedu says, what's the expected direction of FX in the near and medium term? And I think Taiwo already touched on that earlier when he talked about how the current government, based on the kind of economic approach, which is a market approach, according to him, would adopt, and how that could also fuel the growth of our FX. The fact that we'll probably be able to increase export, be able to increase FDIs and the export now in terms of non-oil export, and how that is going to pan out for the FX. Of course, all those things will have effects in our FX direction. Another member here says that, and I'll still stick with you, Steve. He says, we have seen a large number of corporates come to the market via commercial papers in the first quarter. Do you expect this trend to continue? And then what's your outlook for the debt markets for the year 2023?
Yeah, I think the reason why we are actually not even witnessing the huge amount of companies actually coming to the market to raise CP is because we have, since last year, late last year till about now, first quarter, we've seen an elevated yield curve in Nigerian space. And as a result of that, you know that there will be a sort of reflection on the tenor of the CP you're issuing and what the interest rate markup will be, you're going to get against the government. You know, so I think by the time we see a bit of slowdown in terms, although even the government has indicated they're going to borrow a lot this year from the calendar that's been released by Debt Management Office. But that said, we've seen a lot of maturity of some of the funds or some of the T-bills that have been issued since last year, and some heavy coupons coming to the market within the space who are actually channeling and looking for investment horizons or paper to actually invest in. So that said, I think we're going to see quite a lot of issuance of CP going to the end of this year. I think we've not seen enough. We're still going to see more because as companies are trying to scale up, and as a lot of them are actually looking for working capital and stuff like that, it will prompt them to actually come to the capital market to raise money in 2023. Well, for me in 2023, I think I see a very vibrant capital market in 2023. We saw quite a lot of transactions in 2022, whether within the bond space, less of equity transactions in 2022, but in 2023, I think we actually might see more as the economy begins to grow and scale up. As we have new regime who's going to come up with new policies that will affect the life of the citizens and companies as well, as we begin to see more of attraction coming from the foreign portfolio investments and FDI, that's foreign direct investment as well. I think that's going to create space for a lot of people who are trying to, appraising the market to raise capital. So for capital market, I see a very vibrant capital market in 2023, and I see more issue of CPs in 2023 as well. Yeah,
thank you, Steve. You're quite bullish with your direction for the capital market. Quite interesting. We're getting towards the end of the program already. So Dio here is asking where we can download the deals book. So yeah, the Nairametrics teams already have a link on all their social media handles where you can register. But officially, formally, the deals book report will be available for download on Monday morning. That's in 2 days' time. But you can always pre-register. That means that immediately we launch it, you're going to get it on your in your email immediately, so you won't have to go and download anymore. But of course, quite interesting insights there. And for those that are probably just joining us, the deals book again is a compendium or a compilation of all the corporate deals in the Nigerian economy in 2022. Nairametrics research team sources this information from different news agencies, official channels from the companies, and put a lot into gathering this information. The information has the amounts that has been raised, what type of investments it was, if it was seed funding, venture round, grants, acquisition, mergers, capital, CP or board insurances. Any one of those fund types is going to be stated there, the amount, the source, who are the investors. If there are one or more than, then it's going to also be indicated there. The stage, or the status now, if it's still ongoing, or if it's completed, who is the investee, which company are we investing in, and what was the utilization of that fund. The document has quite insight for analysts, government, regulatory bodies, investors, CEOs, entrepreneurs, even startup owners who probably wants to go into in 2023. And finally, I would just talk about ask the last two questions, and I would direct them to, I'll direct one to Razak and then the other to Taiwo. And then while answering the question, you can also just give us your closing take, so we can round up from there. Then I come back to Steve, and he also gives us his own take. Although some of these questions are tilting away from the corporate scene, but I think it's almost impossible to isolate corporate from economy. Olumuyiwa Ogunjobi is saying that kindly suggest how the incoming government can handle insecurities as it affects the prices of food. So yeah, inflation is a major problem here. This person is asking us how government can handle security. So I don't know if anyone will be willing to take that question, but either Razak or Taiwo can take that. And then we also have another question, and Omario Ikomwobanoba. Sorry if I do not pronounce that name very well. I'm not a typical Nigerian. He says, why are crowdfunding not seem to be regulated? So the person is asking, why is it that crowdfunding firms are not really regulated? And apparently he has been scammed a number of times. Yeah, so basically that's the remaining two questions. So let's start with you, Razak. You can touch on any one of them, then Taiwo also, but please also put your closing remark in that conversation. Thank you.
Okay, yeah. I think there is a relationship between insecurity and food prices. There is a relationship between insecurity, agricultural productivity, and then food prices, and then inflation, right? And that is primarily because the inflation basket is made up of largely, the food component is material. So when there is low production from agriculture, definitely it passes on to increase prices, food prices generally. And when farmers can't go to farms, because we do largely subsistence farming, when majority of them can't go to their respective farms, or we have flooding, for example, definitely it will affect overall food production. How the new government will address insecurity, I think that's beyond my remit, frankly speaking. I don't know. I just hope they're able to do it, but how they will do it, I don't know. I'm sure they will have their plans. They will have their strategies to address that, because it's a major factor, right? It's not even about agriculture alone. It's not about the prices alone. It affects almost every single thing. It affects capital inflow. It affects, so many things, right? So I'm sure they will have that on their front burner as something they need to address. But by way of closing, I think the stage we are right now is important. And it's important because probably years back, we wouldn't be in this position to discuss deal books that focuses on not just established companies or capital flows to established companies, but also capital flows to startup ecosystems, right? Which actually shows that there has been significant growth within the Nigerian startup ecosystem, and there is significant capital flow within that ecosystem. And this is, to a very large extent, the beginning of something big, because the companies that are starting up today, or that started out 2-3 years ago, will end up being at least a good number of them will end up being the drivers of the economy in the next 10, 20, 30 years. To me, I believe we are in a stage today that we were in the banking industry in the early 90s, when we had the likes of GT, Zenith, Intercontinental Bank, even though they don't longer exist, started out. I think that's the same kind of curve that we are currently negotiating right now. And in the next 10, 20 years, the impact will be material. The impact of the funding that's coming in, 5 billion, the impact of the talents, even though we're losing a good number of them to foreign markets, the impact of the institutional knowledge that is being built and retained locally, all those things will result into something remarkable, not just for individuals, but also for the economy at large. So, and thanks so much for having me on the call. This has been quite refreshing, and I've learned a lot as well from my co-panelists and some of the questions that the participants asked.
Thank you very much, Razak. Taiwo, please go ahead.
Okay, so I'll try and take the two questions. For security, I think it just boils down to the policies we try to implement at the federal state level. Are we going to our state police? Are we going to improve the salaries of policemen? Are we going to make them more accountable and all of that? Those are the things that will address our security problems, and investing in the right tools to address security problems, technology. So with the new government, they did it in Lagos. They set up a security trust fund in Lagos. And if you compare the security situation in Lagos, where you had 10, 15, 20 years ago, where there used to be robberies and all sorts, it's much better these days. It's not yet there, but if they can replicate that same structure at the federal and across all the other states, we think that should improve security. With respect to crowdfunding, apologies you were scammed, Farm Connect, but we think SEC has waded into this area, and there's now rules and regulations guiding how you do crowdfunding. Even crowdfunding platforms are beginning to have to register with the Securities and Exchange Commission. So with that, I think look out for the ones that are regulated, who have subjected themselves to very good corporate governance practices and have very good team members, so that next time you don't lose your money. In closing, what I would like to say is I think there are many sectors, there are many opportunities that are available in Nigeria that are begging for capital. And the way we see it within Coronation Merchant Bank is there are opportunities out there begging for solutions. And not primarily capital solutions, but financing will always follow good solutions. So we think Nigeria, if the right solutions are brought to the power, the transport, even within the transport, the aviation sector, telecoms, you would have very good finance to chase you at the right price just to get those things done. So we believe the opportunities abound. We believe Nigeria, with this government coming into power and doing the right things, and the caveat is doing the right thing, we think capital will flow back into the country, and Nigeria will get it right. On that note, I'd like to thank Nairametrics for having me on this webinar. I think it's been quite educative for even myself, to my co-panelists for providing some useful insight. Thank you. And thank you to everyone who made out time to listen to us on a Saturday. We know we've taken about 2 hours from your day, and we do not take it lightly. Thank you.
Yeah, thank you very much, Taiwo. Steve, the floor is yours, your closing remark.
Okay, from me, first of all, I want to say thank you to you, Samuel, the moderator. I think you've done a fantastic job. I want to say thank you to the entire team of Nairametrics for giving me this opportunity to be here. I want to thank the rest of the panelists, Razak and Taiwo. They've been very fantastic. We've learned quite from one another today. And I want to thank for the audience for giving us this opportunity to be able to reach out to them and actually trying to log on within the early hours of Saturday morning to listen to us. On the some of the things we discussed today, for me, take back is that without anybody trying to be a gatekeeper, I think investors across the world are looking for the best ideas to invest in. And one of those opportunities and windows will open to a lot of Nigerian startups and SME. So we need to take advantage of that. So a lot of things have been touched on today by the panelists. And I think a lot of startups and entrepreneurs in Nigeria should look into that. corporate governance is very key. They need to take that seriously. You know, sound financial model is actually very key as well. You know, they need to take that seriously, because we've seen situations where a lot of people, in the midst of all the variety of funds actually coming from investors all over the world, have actually, you know, come up with some, you know, skeptical kind of or shorted reports and company and looking for ideas to sell out. And a lot of them have been given money where we can actually trace up until now. And that, you know, confirms what the other person actually talked about, being scammed in the system. That is one side. Another side is even getting money, direct money into the system where the business owners don't know where they're going. And I think what that would do is kill the idea of investors coming to that space. We don't want that narrative to be spoken about Nigerians, because there are a lot of viable businesses that are looking for money to be invested, or they're looking for a lot of investors to actually scale their business to the next level. So I will admonish people, entrepreneurs, startup, to actually get their house together and make sure that they have plan and strong corporate governance in place so that they can attract some of these investments coming all over the world. Thank you.
Thank you very much, Steve. Thank you very much, our panelists, Taiwo, Razak, for your patience with us. Thank you very much, all our audience, for sticking with us for the last 109 minutes talking about Deals Book Report. And it's really been quite interesting for me. It has been quite insightful also. I've learned a lot from our panelists, from their wealth of knowledge and experience. And I think a lot of us will go back with this knowledge, and it's going to impact our business going forward and how we relate to our everyday finances. For our audience who are also looking to download this report, we will send it to every member who joined this session today. Automatically, you are logged on, and we'll send it to you on Monday immediately we launch. But for those who probably are not here, you can also tell them to log into any of our social media handles. We have the links there. You can register, but still do well to follow us on our metrics on all social media handles. Our website, we still very much cover all the news that relates to money. So from the word Naira, it gives you an idea that whatever money is involved, and everything relates to money these days, Nairametrics is always there to give you insight as to what is happening to your money and why it is happening, and then gives you some form of closure or outlook that you can look out for. And on that note, I'll say thank you very much. Thank you very much for having me. My name remains Samuel Oyekomi. And until next time, we still have all our webinars, all our sessions, webinars, Twitter spaces we do during the week. You can also log on. We have interesting conversations on there. Thank you very much, everyone, and do have a wonderful weekend. Bye-bye.